The countdown has well and truly begun. India's tax regime is all set for a sea change. The rates for most goods and services under the GST have now been fixed. Is the government and the industry ready for a smooth transition? Joining us now for a one-of-a-kind show is the Revenue Secretary, Hasmukh Adhia. He's been driving the GST negotiations and he will be answering our queries from industry veterans, tax experts and market players. Mr. Adhia, thanks very much for joining us here on CNBC TV 18. Before we begin, here's a quick look at where we are right now. We have a 5-tier system to the goods and services tax. At 0% means that it is exempt from the GST. We then move to a 5% rate, a 12% rate, 18% and 28%. The Finance Minister has made it absolutely clear in an exclusive interview to CNBC TV 18 on the July 1 rollout. He said, and I quote, "Minister after minister has met me from states and has told me not to blink, stick to July 1, so there is no rethinking on the July 1 timeline." With that in mind, what is the unfinished agenda? Rates of 6 politically sensitive items are yet to be fixed. For example, tax rates for gold, textile, footwear, pearls and precious metals, biscuits, agricultural machinery and beedies are yet to be frozen. The next date for the meeting is on the 3rd of June. The meeting will take place in the capital. So that's where the unfinished agenda lies. Joining me now to pose questions and get clarifications from the Revenue Secretary are the best tax experts in the country. Pratik Jain of PwC, Rohan Shah, MS Money of Deloitte, Uday Pimprikar of EY, tax lawyer Lakshmi Kuramaran. Also joining us are Rajan Matthew, the head of the telecom industry body COAI, Deepak Garg of Reliance Industries. Also to get a check on the market's expectations and clarifications, Vikas Khemani of Edelweiss, Nitin Bhasin and Ritika Mankar Mukherjee of Ambit. We have a full house here, ladies and gentlemen, so let's get straight to it. Revenue Secretary, let me start by asking you and wishing you congratulations on behalf of everybody. It hasn't been an easy task to get to the stage that you've managed to get. July 1, the Finance Minister makes it clear, will be the rollout timeline for the GST. But what are you most concerned about? The worries, if you talk to India Inc. or you talk to market experts, are around things like disruption to working capital, at least in the first few months of the goods and services tax, the readiness of SMEs, the complexity of compliance. What would you be most worried about when it comes to the GST rollout?
Well, as far as I'm concerned, the major concern for us is the consumer education, because it is a new system of taxation in which the benefit of lower taxation will come by way of the cascading effect of tax going away, and because of the seamless flow of input tax credit which is available in the tax system. So the headline rates may go up, but at the same time the overall incidence of tax will come down. But how would the consumer know about it? So our main concern is the consumer education.
Okay, your main concern is the consumer education. Sir, we've got tons of questions that have come into us. Let me start by talking to you about where the market is seeking clarification and clarity, and then I'll get to our tax experts. The first question comes in on the way that the levy is going to be on cigarettes. Morgan Stanley says, is the base rate calculation for cigarettes going to be levied on the invoice value, because VAT is levied on a price that includes excise duty? Our understanding is that GST will be levied on the invoice value. Is that the correct assumption, sir?
That's the correct assumption, yes. It will be on the invoice value.
On the invoice value, which actually means that there will be a reduction then when it comes to cigarette prices.
There won't be any reduction. Ultimately, the entire value chain will get captured. So whatever is the final selling price of cigarette, that will get captured in the taxation net.
Okay, but you're confirming that it will be on the invoice value?
Yes, of course. And part of it is going to be specific, part is ad valorem. So that's going to be covering the invoice value, yes.
Okay.
Some will be quantum wise.
Okay.
And the ad valorem will be invoice value.
The ad valorem will be invoice value. That's the big clarification that the market was looking for when it comes to how the taxation on cigarettes will be levied on invoice value, confirms the Revenue Secretary. Let me bring in our first query now from Pratik Jain of PwC. Pratik, go ahead.
Yeah, good afternoon, sir. My question is on the transition stock, and one of the rules which have not been finalized as yet are the transition.
I can't.
Yes,
can you
go
hear
ahead.
Hear me, sir? Yes.
Yes, we can.
My question was on that. My question was on the transition stock, transition rules, and one of the expectations that industry has is that 40% deemed credit, the percentage is likely to be increased, because it is not adequate to cover for the losses particularly for products which are taxable at 28%. So just wanted to understand if there is any thinking on those lines to increase the deemed credit from 40% to, let's say, 60-70%, at least for those products which are going to be taxed in the GST at 28%.
Well, Pratik, this issue is still under discussion. As you know, out of 9 rules which we had put in the draft regime, 7 of them are now finalized by the GST Council. The 2 rules which are not yet finalized, one of them is the transition provision, which exactly contains the rule that you are talking about. Yes, people have represented to us that 40% credit being given is too less. And so the committee, the law committee, which is going to look at the transition rule finalization, they'll be discussing this issue and then they'll come up with the recommendation to the council. But it's a fair expectation to have what you are stating.
Is it a fair expectation then also to expect that 40% will go up to 65 or 70%?
We don't know what the committee will recommend, but yes, they are seized with this matter and they are aware of this kind of demand coming.
Will this also be decided on the 3rd of June, sir? Do you expect that this will be finalized also?
Absolutely be finalized on 3rd of June.
Also will be finalized on the 3rd of June. Pratik, I'll come back to you for your other questions, but let me go across to Mr. Lakshmi Kumaran. Mr. Lakshmi Kumaran, your question here, sir, for the Revenue Secretary.
Oh, good evening, sir. You had a wonderful job in the fixing that rates. Very mammoth job. My congratulations to you.
Thank you.
When you are doing so, I just wanted to ask, well, you fitted the various items in the various buckets. You have also mentioned the HS code numbers. Can I take it that the section notes, chapter notes, and interpretive rules of the harmonious code also be incorporated here so that they can have proper interpretations?
Yes, it will apply to HSN code that you use for excise purpose also. Yes, the notes and the section notes will apply.
Very good. Thank you, sir.
Mr. Lakshmi Kumaran, does that... okay, that was short and sweet there as far as Mr. Lakshmi Kumaran is concerned.
Yeah.
But let me also ask you, sir... Yes, Mr. Lakshmi Kumaran, you have a follow-up question?
I understood that. Yeah, I mean, this is very important. I think the Revenue Secretary has clarified immediately, so that's fine.
Okay, let me then get another clarification in from you, sir, and this is on with respect to the treatment of ethanol, and the market is seeking clarity on how ethanol is going to be treated under the GST. The views that seem to have come in so far is that in the GST schedule there is no specific mention of ethanol. Ethanol, of course, 50% of the total raw material cost for alcohol. Can you explain to us what the treatment of ethanol will be, sir, under the GST?
Well, I am not a chemical person, but what I understand from your query is that, I mean, I would think there are 2 types of alcohol. One is the potable alcohol, the other is the industrial alcohol.
Yeah.
As far as potable alcohol is concerned, the GST is not going to cover the potable alcohol. That's an exclusive power which the Constitution has given only to the states for levying. As far as industrial alcohol is concerned, or any inputs of industrial alcohol, all of them would be under the GST ambit. And the rate which we are going to put is 18%.
Okay, so I would imagine then that ethanol also falls under that, because under Chapter 22 it mentions ethyl alcohol and other spirits will fall under the 18% tax slab. So it is a fair expectation then to assume that ethanol will also be treated exactly the same way, and that will be 18%.
That's right. Yeah.
Okay, so that's an important clarification that's coming in from the Revenue Secretary. This is what the market was seeking by way of clarity. The Revenue Secretary clarifying there that ethanol will come under the 18% tax slab. So stocks like the liquor stocks that were reacting this morning will seek that clarification. Let me bring in our other experts as well. Vikas Khimani also joins us now from Edelweiss. Vikas, your question for the Revenue Secretary. Okay, we'll come back to Vikas in just a second, but we've got more guests joining us here. And Mani, you were the first one on our panel who was expecting that the services rates would pretty much mirror or be in parallel or in sync with what happens on the goods side. So go ahead now with your question for the Revenue Secretary.
Yeah, thanks, Shireen. Mr. Adhia, I think like everybody else, you must be congratulated for having completed a mammoth task in a, in a relatively planned time frame. So congratulations to you and your team. The question that I have is linked to anti-profiteering. because what has happened is that the introduction of the anti-profiteering clause in the legislation has made people in business very, very worried, largely because of the fact that the machinery provisions in terms of the rules are yet to be finalized, and the authority which will determine anti-profiteering, how they would go about it, none of this is clear till now. So would you be having some kind of a time frame or some kind of a thought in terms of how you are planning to implement the anti-profiteering legislation?
Well, I thought the provision of the law of anti-profiteering, the anti-profiteering provision in the law is very, very clear. What we are trying to say is that if there is any reduction on account of reduction in the tax rate or on account of more credit being available for a particular item, if there is any reduction in the overall tax incidence, the same should be passed down to the consumers. Now, this is a simple provision that we have put. Now, the question is that we do hope that we don't have to operationalize this section at all, but unfortunately, the real life situation is different. Already, I've started getting some reports that even before the rates were announced, some companies were hiking up the price of their products, in anticipation. And even
any
now,
particular sectors where you got these reports,
I won't name any sector, but we know exactly which companies. Now, question is ki it may happen. It's a human nature, that people would like to make some little bit of profit out of it. So the question is that this provision is very much required. Otherwise, our entire calculation of, how we see the consumer price index being affected by GST will go haywire. So the provision is there. We will try to have some more clarity about how and where it will be judged. But my own estimation is that the sectors which are covered by large retail competition, there I don't think we will have to apply it. But it is still possible that some of the big companies, corporates who are making mass scale items of consumption, and these big companies can be persuaded also. We would try to engage with them. We will try to request them not to do any profiteering out of this.
Okay.
But still, if it comes to, we will have to have a provision for rules.
Okay.
And we hope to bring these rules as early as possible.
Mr. Adhia, you said that you know which companies are involved. But if I could play devil's advocate here, sir, that a lot of companies may have resorted to a price hike because input costs have gone up, for instance. We've seen price hikes coming into the cement sector. We've seen price hikes coming into the tire sector. So is there any specific reason for you to believe that the price hikes have been on account of trying to beat the advent of the GST?
These are all matters of detail, which only the authority which is entrusted with inquiry of anti-profiteering, they can go into the balance sheet of these companies, they can also look at their cost sheets, etc., and then decide, This is a matter of inquiry and investigation. But my suggestion to all of them would be that for the time being, till GST is smoothly rolled out, they can hold back their price increases, for some time.
Are you telling industry to hold back price increases till the GST rolls out?
Unless it is a serious issue of cost increase, which they cannot actually, absorb immediately.
Okay.
Otherwise, hold on for some time. After that, you can always do it, But still, if you have to absorb your cost, then you have to do it, but it's a matter of inquiry then subsequently.
That's an interesting thought here coming in from the Revenue Secretary. Message to India Inc. Hold back on the price increases till at least the 1st of July, till the GST rolls out. But Mr. Adhia, one more question on this issue of anti-profiteering before we move on. And again, I'm playing devil's advocate. If the principle of equivalence has been operationalized by the Revenue Department, by the GST Council in finalizing this, then one would imagine that there shouldn't really be any need for anti-profiteering, because you're more or less in a status quo regime as far as the rates are concerned. Is it not,
it's not so. In fact, there is going to be reduction in many items because, say for example, even the items of 28%, if you calculate the total incidence, the standard rate of state 14.5, standard rate of government of India 12.5, 27%. Then if you take an average rate of 2.5% on account of the octroi and the entry tax going away and also the CST going away, then the total incidence is much more than 28%. So there is a reduction there.
Okay.
And some of those items of, for example, food grain and others, they have a lot of cascaded taxes in it, which we have made it zero now. So all the food grain, the cereals, etc., they are going to attract zero rate. So there would be some kind of a price reduction.
There will be price reduction, and the government is monitoring. That is the message here from the Revenue Secretary very, very clearly. But let me go across to Nitin Bhasin, Managing Director and Head of Equities Research at Ambit Capital. Nitin, go ahead with your question.
Yeah. Good evening, Secretary. So good evening, Mr. Secretary.
Yeah.
Yes.
While most of the questions have been asked, one of the questions is about the gold. In terms of, when can we expect that the rates for gold would be announced, and what is the thinking behind in terms of, when you will come out with the rates exactly, in terms of, how does the consumer and the industry bear the brunt of it?
Well, Inshallah, everything going well. We hope to finalize the rate on gold and jewelry on 3rd of June. But as far as your second part of the question is concerned, I don't think I can predict anything about it, nor do we have any particular side to take. It is for the council members to decide.
But sir, if I could just take that point forward now, sir, the Arvind Subramaniam recommendation was between 4 and 6%. Thomas Isaac, the finance minister of Kerala, says because in Kerala the rate is 5%, it should be 5%. VAT is between the 1% range at this point in time. So what is the current sense of the GST Council, sir, when it comes to gold?
There is a difference of opinion among the members, and the members will sort it out. But there are views on either side. There are people who say that higher, if you keep a very high rate of tax on such an item, then there would be a massive tax evasion also, because this is one commodity which is also prone to evasion. So looking into all these factors, the council members will decide.
Okay, but is the sense of the House that the rate should be lower than 5% today, sir? I
wouldn't be able to judge anything about that. We had some discussion very early in the GST Council meetings. Yeah. And after that, there hasn't been any full-fledged discussion on this after taking into account all the aspects of the decision. So it's only in the next meeting that this issue will open up, because so far it has never come up for discussion. In the last meeting, we couldn't find any time for discussion. Okay, so along with gold, sir, things like BD, footwear, textile, etc. will also be taken up and finalized on the 3rd of June? Absolutely, yeah. Okay, so the 6 pending items will be finalized. We hope to do so. On the 3rd of June. Let me bring in Rohan Shah into this conversation as well. Mr. Shah, go ahead with your question for the Revenue Secretary, sir.
Mr. Secretary, firstly, compliments on the wonderful work done, and more so in the excellent spirit of cooperation at the GST Council. I think as a nation we need to compliment you. Sir, may I ask this? One concern I think which is coming up is that while government is definitely ready and large industries are ready, there seem to be quite a few in small and medium who still will take some time to sort of get ready. And the question is that what will be the attitude of the tax administrator? Will this be a situation where you are looking more for people to participate, become part of GST, or can people expect that if they are not compliant for technicalities or other reasons, that they may face some quite severe consequences? What will be the approach to that administration in the first phase?
It's a very good question that you are asking, and everybody is worried about it. Well, as far as interface with the tax administration is concerned, I would say that there is going to be virtually zero interface with the tax administration because of the entire system being online. So the only thing that we expect the small and medium industry to do is to get IT ready in terms of filing all the returns of GST, etc. And once they do it, then there is no expectation from our side. But in spite of this, I would say that suppose if there has been a small mistake by small people, small traders and small MSME people initially, then I don't think we are going to clamp down on them right in the first phase of the implementation. We would definitely give them some time to adjust. But at the same time, I would request all of them to be ready. Let them not be complacent. Let them not think that the GST is not coming on 1st of July. We all have to be ready, and that's why if they are ready in terms of filing their returns, etc., and then there'll be a lot of GST Suvidha providers, the private firms which will get into this, and it will make life easier for all sections of the society. including small traders and MSMEs.
But, sir, just a follow-up question on that. What is the feedback that you're getting from your field formation, sir, in terms of the readiness of the SME sector? Because this is crucial now for the entire supply chain, is it not?
Well, I don't think it's a big factor for them. We are, in fact, you people sitting in urban metropolitan cities may not be aware, but our field formations, both of state and the central government, they are going from town to town, and all officers' work has been divided. And we are holding meeting in even the smallest towns, smallest industrial areas. And the people are being explained the provisions of the law and the rules.
Okay.
And so people are being made ready about it. And a lot of publicity campaign is also being done. We will be doing it further also by way of newspaper advertisements and other medium.
So when you say that in the first phase you will try and be a little more flexible when it comes to compliance on part of the SMEs, what should we understand the first phase to mean, sir?
No. Initially, few months, everybody may struggle a little bit. So in terms of timeline, because it says that if you are late in filing your return, there'll be a fine of 100 rupees per day or something like that. Those provisions we can relax for the time being. But again, because each other's input tax credits are involved, at least B2B operators have to be on dot. I can understand if some B2C people are not able to file their return on time, etc.
Fair point. Let me bring in Vikas Khemani. Vikas, your question for the Revenue Secretary.
Mr. Secretary, congratulations on pulling off such a transformative reform in such a short time. Hearty congratulations for that. I have two questions. One is, I think, we have introduced e-way bill system, for transport while, goods are being transported, but still it is silent about the state level checks, which essentially, is a big bottleneck in current system. Huge amount of time gets spent. So are we going to do away with this system? And if yes, when it is likely to happen? And secondly, my question is more in relation to oil and gas, where it is outside of the purview of GST, and currently it gets the full input credit. So what oil and gas companies are going to do? Are they going to increase the price and pass on this burden, or there is going to be some change going forward on this? If it is going to get passed on, then probably it might be inflationary. So what are your thoughts on that, sir?
Well, as far as your first question is concerned, the entire purpose of creating an e-way bill system is to create an audit trail of transfer of goods, when it moves from one place to the other. We just want to create an audit trail for it. We don't need to necessarily check whether the goods are actually moving or not moving. But even if we want to do it, checking of goods moving from one place to another, we don't have to stop anybody at the state border necessarily and create a traffic jam at the state border. Because now that is immaterial. Earlier there used to be movement in 2% CST. And then some people would just pay 2% CST and sell the goods within the state rather than taking it out of the state. But now that is going. Now because all goods will move after payment of GST, IGST, at least between the two states, then we don't need to have any state borders. But yes, we can have some intelligent checking within the state when the goods are moving, but that would be far and few. And I don't think anybody needs to be worried about it. The main purpose of e-way permit is to create an audit trail.
On the second question of oil and gas, sir, that was raised by Vikas as well.
Well, you are talking about oil and gas exploration sector, isn't it, Vikas?
Yes, sir.
Yeah. Okay, but I don't think there is going to be much
even
of a...
imported duty also, sir. When it's being imported.
Yeah.
So they get offset of the custom duty and...
Yeah, that's right. Custom duty will not change, whatever benefits of custom duty we are given to any sector, suppose if it is capital goods sector for E&P sector, oil and gas sector also, if there is any custom duty exemption, that will remain. If there is a subsidized custom duty, that will remain. Okay. That is not getting changed.
Okay. Since we're talking about oil and gas, let me bring in Mr. Deepak Garg, also the Group Head GST at Reliance Industries. Mr. Garg, go ahead, because I'm sure you have a related question here for the Revenue Secretary.
Yes, thanks, Shireen. And congratulations, sir. Of course, needless to say, the entire country is congratulating you. What a wonderful reform. And the rules, when you read the rules, they're examples in simplicity, from what we've been used to in central excise rules to what input tax credit and valuation rules. So that's one big area of compliment, sir. Second big area of compliment is that It has been very responsive. The GST Council, your team of officers, representations from the industry have actually been read, looked into, and relief given with every successive stage of rules that have come out. So therefore, hats off to that, sir. And now coming to the oil and gas sector, or I'd rather say the entire energy sector, which has been kept out of GST. There was a news item in Economic Times today of talking about 25,000 crores of lost credits or costs to the oil and gas sector alone. And this would also be there in the electricity sector. And not only would the cascading be to the extent it is today, it would also increase because the rate of services, which is a very critical input for oil and gas and electricity sector, the rates go up from 15 to 18%. And also exemptions like for explorations, etc., those exemptions go. And then the possibility of getting inputs on a CST, 2% discounted rate also goes. So even for any purchases, you have to have an 18% payout on taxes. So any thoughts on or any plan of mitigating this possible inflationary impact on the energy, because of the energy sector in the rollout of GST? Because this will be very critical in all the downstream industries.
Well, as far as energy sector is concerned, of course, the major sector is electricity. Okay. Yes. Now, as far as electricity is concerned, we have taken particular care to see to it that the GST on coal remains at 5%, although the existing incidence on coal is about 11.3%, as we have calculated. Now, this will give huge benefit to energy sector. And secondly, you know, even the coal, when it was imported, the CVD was only 2%. Yeah. And that's why we were worried about making it 12%, the incidence on coal. So we have taken a risk of revenue in making making GST on coal to be 5%. So, and secondly, in energy sector, even in case of VAT era, there was always a small cascading happening there. I don't think the input tax credit for VAT on products used in energy sector was available when you had to pay your electricity duty. Those two were separate in any case earlier also. No state was giving input tax credit for VAT in electricity duty. So that remains. So virtually nothing changes there. And on the other hand, we have tried to make our coal as a moderating factor. And as far as oil and gas is concerned, the estimates which have come in the newspaper, I don't think they are correct. There is not going to be so much of cascading on this account.
What will the cascading be then?
We'll have to calculate, but we have already set up a group, and the group has been preparing some report. Earlier also, while discussing GST for oil and gas sector, we had looked at the incidence. It is not so much high. I don't remember the figure offhand. Okay. But it's not so high.
It's not that high.
It's not that high.
Gentlemen and ladies, we are going to take a quick commercial break, but don't go anywhere. We're back in less than a minute. The Revenue Secretary continues to take queries here from across India on the rollout of the goods and services tax. Crucial clarifications coming in from the Revenue Secretary. We're back in a minute.